Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. Wynn Resorts reported earnings last week, and I think the numbers were really interesting. This continues to be one of the strongest companies in gaming. Really good numbers coming out of Las Vegas. Macau is improving really quickly, and then you have a resort in the UAE coming in the next few years. So a lot to go over. And then even after earnings were reported, we got a little bit more news about buying back debt and what was going on with the iGaming operations. So I want to cover everything that's going on with Wynn recently. My name is Travis Hoyam. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. If you like this video, check out my newsletter, Asymmetric Investing. I have a link to that in the show notes. And let's go straight to the earnings report, start there. Operating revenue for the quarter was $1.6 billion, an increase of $608 million from $908.8 million a year ago. Yes, that is correct. The increase was $687 million. I'll go through exactly where that came from. Net income was $105.2 million. So we're now at the point where Wynn Resorts is actually profitable on a net income basis, not just an EBITDA, which is the proxy for cash flow coming from resorts that we often use, actually generating positive net income. So really solid to see for the company. Adjusted property EBITDA, like I talked about earlier, $525 million for the second quarter, an increase of $345 million compared to a year ago. So where exactly is this money coming from? Let's start in Macau. Wynn Palace really should be Wynn's best operating casino long term. Hasn't quite been the case over the last couple of years because of the declines in Macau, but revenue was $468 million for the second quarter, and adjusted property EBITDA was $156.6 million. So that's a run rate of over $600 million per year in cash flow from that resort. So Wynn Macau, which is the older resort, $302 million in revenue, adjusted property EBITDA of $90 million. So again, really solid results there, about $3 million in run rate EBITDA there. Las Vegas, like I said, has been just phenomenal for the entire industry over the last couple of years, bounced back and hit record revenue on a number of different levels, specifically on gambling revenue in 2022. 2023 continues to be really strong, although not quite the same growth level. Revenue was $578.1 million, an increase of $1 million, but adjusted property EBITDA, $224.1 million, getting close to a run rate EBITDA of $1 billion per year out of Las Vegas. Now, years ago, I used to think of $500 million as a really phenomenal number coming out of Las Vegas, EBITDA from Las Vegas. Wynn Resorts was one property that could get there. The Bellagio was another that could get there. And really, that was about it. But now we're talking about almost double the property EBITDA from this casino. So just really phenomenal how much money is coming from there. Boston Harbor operating revenue is $222 million and EBITDA was $69 million. So this was a big question when they built this casino. How much money is it going to generate? And it seems to be going really well. The balance sheet, there was a total of $3.65 billion in cash, and long-term debt was $12.1 million. So the enterprise value net of cash is about $20 billion for Wynn Resorts. Again, if we go back up here to the EBITDA of $525 million for the quarter, that means that on a run rate basis, the company is generating about $2.1 billion of EBITDA, or again, like I said, a proxy for cash flow, and enterprise value of $20 billion. So an enterprise value of less than 10 times EBITDA, just to give you an idea of the valuation of the company. So a couple of things to cover that happened after earnings. One is that Wynn is getting out of some of the sports betting and iGaming markets for WynnBET. This is one of those businesses that a lot of casino companies tried to grow in online betting, and it just hasn't gone particularly well. It hasn't been profitable, very high customer acquisition costs. You see this across companies like DraftKings. So Wynn has just basically said, we're going to exit some of these markets. I don't think that's a big surprise. They weren't a big player, and it's not a core growth market for them, because I think their experiences and their locations are really where they differentiate themselves. The other thing that they did is launched a tender offer for some of their debt, 5.5% senior notes due 2025. Here's the offer right here. Base consideration: a bond typically has a $1,000 par value. So when it's issued It's often issued at par. So somebody would pay $1,000 for the bond. That bond has actually gone down in value to $940, and then they're offering a $50 early tender premium of $50 for total consideration of $990, a small discount for this debt. And the idea there would be you save the interest payments on the debt and delever the balance sheet a little bit. Small discount, so not going to really be a game changer for Wynn Resorts, but just something that's worth noting. I think the results for Wynn were really solid. And this continues a major transition in the casino industry to just a cash flow business. And that's really the way that I think investors should think about gaming in a company like Wynn Resorts right now, is how much cash are you generating and what are you paying for that cash generation? The enterprise value to EBITDA multiple of under 10, I think, is ultimately a really attractive price point. With that cash, management can do things like pay dividends. Historically, Wynn has paid a special dividend. They could buy back debt like they are doing. There's some expansion ability, but not a lot of expansion ability. And remember that we still haven't seen Macau come back to full strength. There's still the potential for continued growth in Macau. So the current valuation, the current cash flow could get better over the next couple of years. I think that's worth keeping in mind. The market didn't react particularly positively to these results, but I think there was a lot to like for Wynn Resorts. And this is a differentiated company, really plays in the high end of the market. I think this could just be a cash flow machine for years to come. But what do you think of the results? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.